Diversified steel and mining company OneSteel has posted a static half-year profit of $116 million. And while the company says it's a slightly disappointing result, it's still fared better than local rival BlueScope, which yesterday posted a $55 million half-year loss. The difference is OneSteel has an iron ore mine, which meant it hasn't suffered from increases in raw materials. Emily Stewart reports.
Despite its name, OneSteel doesn't like to be referred to as a steel company.
While steel making is an important part of the business, it ignores the fact that, we now have an iron ore mine sale, have a recycling business, we now have a very significant mining consumables business.
That diversity enabled the company to outperform some of its rivals. OneSteel posted a half-year net profit of $116 million, down slightly on the same period the previous year.
The key drivers for the result were the strong numbers out of their iron ore business, which were partly offset by weak numbers from their steel business.
Iron ore revenue was up around 40% to $465 million, while recycling rose 45% to over $700 million. Meanwhile, manufacturing was down 6% to $1.4 billion, and distribution was also down 3% to $1.3 billion. Analysts say OneSteel has capitalised on the mining boom, while its local rival BlueScope Steel has suffered.
Well, the mining boom has been quite positive for OneSteel given their iron ore assets. Iron ore has really delivered them very strong earnings in what is a pretty soft steel environment.
During the period, the company finished the acquisition of Anglo American's Molycop and Altus Steel mining consumables, but they weren't included in the interim results.
It makes sense that OneSteel's expanding its mining consumables division. I think that it should also provide OneSteel with a buffer around any movement in the steel price, but it's early days in terms of that acquisition.
Analysts say second half earnings should rebound in the June quarter, but the company declined to give a full-year earnings outlook, citing the high level of uncertainty around the foreign exchange rate, steel prices and the rate of economic recovery.
In the current period, we'd expect the March quarter margins to still be adversely impacted by the very rapid appreciation in the $8 last half.
The market wasn't impressed with the results, with OneSteel stock 5% down on the day.